Hello everyone, welcome to another episode of Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 26th of June, 2023. Right, everyone, let's get into it. So we have an update on Coinbase's case with the SEC here. So you can see here, Bloomberg Crypto reported that the US Supreme Court sided with a Coinbase unit in a ruling that reinforces the ability of companies to channel customer and employee disputes into arbitration. And Paul Guerrero, Coinbase's chief legal officer here, quote tweeted this and said, "We are grateful to the Supreme Court for its careful review. Another example of why I believe in the American court system. The rule of law is sometimes slow and at times disappointing, but it remains our last best hope in an imperfect democracy." And then you can go read the full details of this in the Bloomberg Crypto report. But from my understanding, the reason why this is good for Coinbase is because arbitration favors companies over, I guess, the regulatory bodies. Now, I don't know the details of all that because I am definitely not up to speed on these sorts of things, but the fact that this is good for Coinbase means it's good for crypto. Obviously, we want Coinbase to win their case against the SEC. We would also like Binance to win their case against the SEC, which is kind of funny because I've been a bit harsh on Binance, I think, and very favorable towards Coinbase. And I have my own reasons for that. I mean, I've been around since Binance has been around. I've seen everything that they've done, all the good that they did and all the shady stuff that they've done, and there's a lot of shady stuff that they've done that people just don't know about, right? And I think they're a lot better these days as an exchange, and they've cleaned up their act a lot. But still, if you've been around like I have, you've seen all the history there, and it's kind of not the best. And don't get me wrong, Coinbase also has some black marks against its history as well, but nowhere near as much as Binance. And I doubt Coinbase has done anything anywhere near as shady or anything shady really compared to Binance, especially because Coinbase is based in the US, very heavily regulated there, and I think that there was some insider trading stuff that happened that was prosecuted by the US authorities, and those employees were obviously let go or ended up paying a fine or something else like that. But generally, yeah, I definitely do have a much more favorable view of Coinbase than Binance for those reasons outlined. But I still would rather Binance win their case against the SEC. Now, Binance's case is a bit different, as I've explained before, because there are kind of criminal charges against them for things such as, I don't know, trading-related things. I can't remember the exact charges off the top of my head. Whereas Coinbase, it's really just two main things. It's a trading of unregistered securities, and they listed a bunch of tokens in the suit, and also for their staking products, which the SEC claims are also securities, right? So it's definitely focused on the security stuff and not on any kind of criminal insider trading or anything like that in that suit there. So it's just great to see that Coinbase has gotten a win here. I really do want them to win their overall case. It's going to take probably years to play out, as I've mentioned before, but I figured that I would just update you guys on this because it was an interesting thing that happened over the weekend. All right, now a Twitter account called Poop Man, a DeFi rookie on Twitter, put out an interesting tweet showing a staking-related tweet here, saying, "Although the growth of ETH staking has slowed down over the past 30 days, I'm still very optimistic about the LSD market." So Poopman has checked Dune Analytics for some interesting stats around the different staking services. The fastest growing over the last 30 days was Swell Network at 58% or plus 58% staked, and Figment at plus 57.5% staked. And the largest outflow is Hobby at negative 27.2%, and Bitstamp at negative 21.1%. Now, fun fact, for those of you who don't know, Figment actually has, I believe, around 5% of all ETH staked under their control there, and I didn't even know that. I wasn't even aware of that. So they're a pretty big player. They're not just a small player here, and obviously they've increased their market share recently. I think a lot of that was due to Celsius unstaking from Lido and going with Figment with a lot of their stake. So that was why Figment grew there. But still, it's great to see that it's coming out of dominant protocols or dominant kind of areas and going to the underdogs here. Swell definitely being the biggest underdog, considering that they haven't been around for very long. They're obviously very new, and they're starting from basically zero as of a couple months ago, I believe. But yeah, you can see this Dune Analytics kind of table here that shows the percentage over the last 30 days, or I guess like the past month, showing the stake growth of Swell and Figment, and also Kiln, which is also another big operator on the Beacon chain. You've got OKX, Rocket Pool, Unidentified, Staked US, Lido, Frax Finance, and Binance being the winners here. And you can see their market share. I'll link this in the YouTube description below. And then a bunch of losers. The losers are pretty much all the centralized exchanges, Kraken, Coinbase, Bitstamp, and Hobby, which is, I guess, kind of good to see that stake is coming off centralized exchanges. And this may be due to the regulatory stuff, especially with the SEC going after Coinbase for their staking products. I think that definitely points to this outflow here, because you can see here Coinbase is 62,000 ETH has flowed out of their staking product, but also I'm sure there was an element of arbitrage going on between CB ETH and Beacon Chain ETH, because if CB ETH is at a discount, you can buy it and then arbit for actual Beacon Chain ETH, withdraw that from Coinbase and make more ETH doing that there, and potentially make more dollars there through that carry trade if you play it right, if you kind of like hedge your bets there right. So cool to see that there. I just wanted to highlight that for you guys, that the great ETH restake, the great reshuffling of ETH stake is actually happening. As I've said before, it is a slow process, but it has actually been happening here. And it's funny, Poopman said the growth of ETH staking has slowed down over the past 30 days, but it kind of really hasn't. I mean, the amount of validators in the queue is still over 90,000. So in terms of, I guess, slowing down, it means that it stopped going kind of like up only, basically. It's basically hovered at around 95,000 in the queue, but hasn't gone beyond that. But that means ETH staking is still growing, right? That means there's still more ETH coming in. There's still more inflows into ETH staking. And obviously with the exit queue has pretty much been almost entirely empty for the entire time since, since that spike post Chappella. So yeah, just ETH staking continues to grow, and it continues to grow in a really diversified and distributed way now. It's not like all ETH stake is going into one service anymore. It's actually being spread out. And obviously Lido is still pretty dominant. Still has some pretty big inflows here, but a lot of the other protocols have as well, and it's not like Lido has like all the inflow, which is great, because one of the things that I think a lot of people in the Ethereum ecosystem want to see is not only Lido's market share going down because people are reshuffling out of Lido to something else, but also stake being distributed to other services, other than Lido and centralized exchanges. But of course, Lido is a big beast, right? Lido makes it easy for people to stake. But as I said before, the more competition, the easier it is for everyone to stake, and the better it is overall for ETH staking here. All right, so onto some L2 stuff. Actually, I'm going to talk about this after I talk about a bunch of these L2 updates, because this is a longer discussion. So first off, I just want to start with something that ZK Sync announced. So they've shared their first draft of something called the ZK Credo, which is a declaration of the foundational principles of the emerging ZK-powered Internet of Value. V1 is now live on GitHub for community discussion and feedback from the Credo's rightful owner, which is you. So basically, this, I guess, is a constitution of sorts, or a mission, I guess, statement of sorts, or a mission or a values aligned document here from the ZK Sync team all around ZK as a technology. So you can check out this. I'll link it in the YouTube description below, but it basically goes over some of the principles of the ZK revolution, such as integrity, privacy, and magic, of course, because a lot of the ZK stuff definitely it can be sometimes indistinguishable from magic. And then a bunch of other principles such as trustlessness, security, reliability, privacy, and a bunch more here. And then setting the collective action, that we're all in this as a collective, right? We're all in this as an Ethereum collective, as a collective of people that are interested in ZK technology, and we all play a role in moving this technology forward. So I thought this is a really great document, and it's not a finalized document. As I said, it is a draft, and they're looking for community input on this and looking for people to help them kind of help them kind of edit this and put this together, and it kind of is like a living, breathing document, at least right now. So you can check this out for yourself. I'll link it in the YouTube description below. But just a great initiative from Matter Labs, which is the team behind ZK Sync here, and they also have a detailed breakdown in their Twitter thread around this as well. So you can go check that out for yourself. I'll link it in the YouTube description below. All right, second update around L2s was an interesting tweet thread that I came across from Castle Capital. So there was an Arbitrum DAO airdrop that happened when Arbitrum issued their token, obviously the ARB token here, and a bunch of projects on Arbitrum, a bunch of DAOs got allocated ARB tokens, right? Got them airdropped to them. So this is a 2-month retrospective on where these tokens actually went across 100 plus DAOs, which was over $125 million of value. And you can see this Sankey diagram here that shows each of these DAO projects, or at least the biggest projects that got the most amount of tokens here, or sorry, the projects that got the most amount of tokens here, and where that actually went. So there was a bunch of projects at the top here where they went to internal protocol usage. Some of them went to team allocation, external farming. About 4 million ARB tokens got sold, and you can see which projects sold their tokens here. Some of it went into liquidity pools, and others went into incentives. And there's a thread here which breaks this down even further, which I'll link in the YouTube description below for you to check out. But the reason why this is so interesting to me is because I haven't seen something like this done before. We've all seen, tons of airdrops being given out, whether they be, airdrops to DAOs and projects or airdrops to individuals. And a lot of the time, pretty much, I guess, like most of the time, or pretty much all the time, we don't actually have studies or breakdowns of where these tokens go. A lot of people will assume that the tokens just get sold, right? But as you can see from this Sankey diagram, that when it comes to distributing these tokens to DAOs and to projects, a lot of it actually ends up not being sold and ends up going to team members, or ends up as yield farming incentives or liquidity incentives, ends up in the DAO itself and just stays there, and maybe gets paid out to contributors over time, or is used in future liquidity mining programs. And it's funny because, like, I think there'd be a stark difference between DAOs and individuals. And I have seen breakdowns of the airdrops that go to individuals and where it goes. Obviously, the vast majority of it gets sold, and that's totally fine. I don't think that's actually a big deal. A lot of it gets sold for taxes as well, because a lot of airdrops are taxed as income at the time of getting it. But the laws around that are actually changing in Australia, at least. And this isn't tax advice, but this is how it is in Australia. The airdrop, if it's an airdrop that's done when the token is created, the cost basis is zero. So you don't have to actually pay income tax on it. You only pay capital gains tax when you sell that airdrop later on. So you actually get the coins, you get to keep them all without owing tax on it, because the cost basis is zero, which means you basically got zero income. But this only applies if the token didn't already exist. This only applies at the token generation event. And as I said, this is Australian law. Don't know what or Australian tax law. Don't know what it's like in other places around the world. And it's not tax advice. It's just the way, it's being interpreted now in Australia there. But yeah, as I said, most of the airdrop gets sold, which is only natural. It's free money for a lot of people. There are obviously a lot of airdrop farmers. But yeah, it's just great to see a breakdown from Castle Capital here on the different projects within the Arbitrum ecosystem, what they did with their tokens. And as I said, I'll link this in the YouTube description below for you to check out. All right, so Optimism has announced that they have officially changed the name of Optimism to OP Mainnet. Now, it's been confusing for me personally to refer to the Optimism layer 2, the Optimism rollup, because sometimes I would call it Optimistic Ethereum, other times I would call it Optimism, and now, obviously they've kind of said, okay, well, it's just called OP Mainnet, because there's going to be a bunch of different chains that are built on OP stack. We saw Zora Network launch last week. Obviously, Base is also going to be launching, hopefully, sometime this year from Coinbase. It's using OP Stack. Avo is using OP Stack, and there's a bunch of other chains as well. So having the OP Mainnet be called OP Mainnet, so it's not confusing, is obviously very important. So yeah, whenever I say OP Mainnet from now on, you'll know what I'm referring to. It's just referring to the generalized OP Stack chain that was originally built by the Optimism team and is still maintained by the Optimism Labs team. But yeah, just wanted to kind of shout that out there. All right, now this is the deeper discussion I wanted to have around layer 2s, and this was a tweet that was put out by Stephen Goldfeder, who is the co-founder, or one of the co-founders of Off-Chain Labs, the developers behind the Arbitrum ecosystem. So he put out this tweet where he said, "We can debate whether an optimistic rollup without fraud proofs has a place in production, but here's what's not debatable. Those pushing this tech should not be using terms like secured by Ethereum. Without fraud proofs, Ethereum provides zero security." Now, this is obviously a shot across at OP Mainnet, because OP Mainnet does not have working fraud proofs in place right now. Now, their fraud proof system is called Cannon. It is under development, but it is not currently live. Whereas for Arbitrum 1, there is a working fraud proof system, but it is permissioned, which means you have to be whitelisted in order to partake in submitting fraud proofs if something was to go wrong here. Now, the broader discussion here is really what the term secured by Ethereum means. Now, I have used it a lot in the past, and I've also said that there's a big asterisk next to this term, where essentially I would argue that most, if not all, currently live rollups are not technically secured by Ethereum because they have things like admin keys or upgradability or security councils, or not, they don't have fraud proofs or permissioned fraud proofs. I think that the terminology itself is debatable, as Steven said here. I mean, it's debatable, I guess, like as a lot of people have said, not Steven specifically, because he says something about You can call something an optimistic. You can debate whether you call something an optimistic rollup if it doesn't have fraud proofs in production. That's a different discussion. But I think generally the terminology is always up for debate, and there's always going to be a debate around this. So I'm not going to get bogged down with that. But when I say kind of secured by Ethereum, when I would consider something to be secured by Ethereum, I think generally you would want it to have, in the case of optimistic rollups, you would want it to have working permissionless fraud proofs. At least that's what I would like to see. You would want to have no upgradability from a multi-sig. You would or no security council. You would want upgradability to only be in place as part of a DAO, and you would want there to be a long time lock on it. And this goes back to a lot of the stuff that Vitalik has spoken about before in his stages of each rollup and their stages of decentralization. And there is obviously a tracker on the L2Bit website now for this, where you can see stage 0, stage 1, and stage 2 for all of this. But generally, yeah, I mean, I don't know how you could argue that something is secured by Ethereum if it doesn't have a fraud-proof system. Because right now, OP Mainnet is in what I would like to call trust me bro security model, where essentially you're just trusting the Optimism Labs team with everything. Because there's no fraud proofs and there's no way to prove fraud on the OP mainnet, you're trusting that the Optimism team running the validator and sequencer or the Optimism Labs team, I should say, is not doing any funny business here. Now, when it comes to Arbitrum 1, because they have a fraud-proof system that is permissioned, you are trusting the permissioned, entities at the end of the day. There is a difference here, though, in that with the way fraud proofs work, the fraud proof being submitted by the permissioned entity would only work if it was actually pointing out fraud, but the economic incentives aren't exactly there because it's permissioned, and there's no, like, as far as I know, the bond doesn't have to be that big, or I don't even know if there is a bond in it. I haven't looked too deeply into it, and as I said, L2Beat has this information. So yeah, I mean, there is nuance here when you talk about these things, and that's why I think a lot of people get confused by this sorts of stuff. But generally, when we say secured by Ethereum, or at least when I say secured by Ethereum, yeah, you want permissionless fraud proofs. You don't want there to be any kind of like central actor over it. You don't want there to be like multi-sigs and stuff like that. And the same is true for ZK rollups as well. ZK rollups obviously don't have fraud proofs. They have validity proofs, so it's a different security model. But still, if there is a ZK rollup and the only people that can post proofs are permissioned or are controlled by the team, and there's a multi-sig, then yeah, I mean, it's very debatable or very hard to argue that you could say it was secured by Ethereum in that respect. And it's funny because you can actually extend this out to anything, not just L2s. You could say that, I don't know, a DeFi app on Ethereum that has a central multisig behind it, where that multisig has complete power over the entire protocol. Could you say it's secured by Ethereum? I mean, it kind of is, because it's on the Ethereum network, and outside of the team, the whole protocol is secured by Ethereum validators, right? By the Ethereum network itself. But at the end of the day, the real security, the ultimate security there is just the multisig. Because if the multisig can steal the funds, then it doesn't matter how secure Ethereum is, it doesn't matter how decentralized Ethereum is, the app is still able to be, or I guess like the DeFi protocol, I should say, is still able to be accessed by that multisig and still able to be rugged by that multisig, right? So there are different levels of kind of secured by Ethereum here. But in my mind, when you say secured by Ethereum, it shouldn't have a central kind of multisig that controls everything and that can steal funds or anything like that. So there are very few things that meet that criteria. I think Uniswap definitely meets that criteria, especially stuff like V2, where there's literally no governance at all on it and nothing can be controlled by anything. There's no multi-sig. V3 doesn't have a multi-sig either, doesn't have any central control over it, doesn't have oracles or anything like that, right, where it's a central point of failure, but it does have governance which you can turn on and off a fee switch. So yeah, if you want to look at the absolute gold platinum standard, it would be a Uniswap V2, which is truly secured by Ethereum. It is as secure as Ethereum, barring any kind of, I guess, bugs or exploits in the code, which is another thing you have to consider when you're talking about security as well. So my whole point here is that this is a very nuanced discussion. This is not something that you can just like you can just like say there's a definitive, I guess, definition of. It's debatable, and everyone has their own definitions of these sorts of things. But I think over time we'll coalesce around one that is generally acceptable. And I guess like it's going to be kind of a long time before that happens, because there are economic incentives at play generally between the different teams building these sorts of things. But yeah, I just figured it was something worth bringing up for you guys to digest there. All right. Sismo has I guess, like very interesting roadmap here that Hadrian has tweeted out. So he said, "I'm so excited about the Sismo roadmap, which is zero knowledge proofs as a service. Builders get the Sismo App Store to create ZK apps from templates, no need to code. Users can create and share zero knowledge proofs like NFT ownership with a simple link. And devs, tutorials and case studies showcasing how to build powerful apps." Now, just a refresher here, Sismo is basically building a bunch of tools for people to use and build their own ZK apps around to be able to prove something without having to be without revealing that it is true, which is obviously the whole point of zero knowledge proofs here, outside of scaling layer 2s and stuff like that. But I've given the example before of being able to prove that you own a certain token on a cold wallet address from your hot wallet address without revealing where those tokens are. So you don't have to reveal your cold wallet address, which is obviously very cool. But other things like credential proving and stuff like that, proving who you are without having to reveal the actual credentials themselves, is very powerful. And Sismo is at the forefront of that. And they've got a very exciting roadmap, as Hadrian says here, for builders, users, and devs, which you can obviously check out if you go to the Sismo website itself and check out the Sismo project there, which I'll link in the YouTube description below for you to do so. All right, so the 11 ETHGlobal Waterloo finalists have been announced here. So this, obviously, a tweet thread will be linked in the YouTube description below for you to check out. But yeah, ETHGlobal Waterloo took place over, I guess, like the last week, I think, or the last few days, especially over the weekend here. And it is I think it's the final conference before ETHCC. I don't know the exact conference timeline here, but I know ETHCC is going to be huge, and ETHGlobal Paris is going to be present around ETHCC as well. Yeah, I believe that's the next event as well. I won't be at ETHCC, unfortunately. Paris is just way too far away from me to travel to just for a few day conference here. And honestly, I'm not a very big fan of Paris. I've been once, and I don't really intend to go back anytime soon. But yeah, if you're going to be there, HCC, definitely one of the biggest conferences. I think it would go like DevCon, DevConnect, ETH Denver, and then ETHCC, unless I'm forgetting another conference in terms of size. So yeah, you'll enjoy it if you're going to that there. But in terms of the Waterloo finalists or ETHGlobal Waterloo finalists, you can find the Twitter thread, which I'll link in the YouTube description below. I haven't actually had a chance to go through each of these personally yet. I'm still behind on a lot of things, unfortunately. I tried to take a break over the weekend from crypto stuff just because it is a crab market. It is a lot easier to take a break these days than it will be probably in the future. But yeah, I will be checking this out offline at some point, but you can check it out as well. I'll link it in the YouTube description below. As I said last week, over the ETHGlobal finalists that I highlighted, these are always interesting, always focused on innovative stuff that you may not see being talked about or being, I guess, played around with on mainnet. Definitely a lot of early stage projects here, of course, which you can check out for yourself. And there are usually demos with these projects as well. So it'll be like a GitHub repo. I mean, you can go to the ETHGlobal page. Like, I'll just open one of them for you. I open the one for Aquanet here, and you can see there's usually an ETHGlobal page with screenshots, and then you can see the live demo and source code and a description about it. And each of the projects have this, which is actually really cool. And I've been a judge for a few of these things before. So many cool projects, so many cool builders, usually young builders as well, that are just getting their feet wet with crypto and Web3 stuff. So always cool to see this here. So you can check this out for yourself. I'll link it in the YouTube description below. All right, I've got a few minutes here. That's it for the news over the weekend there. But I've got a few minutes here. I wanted to talk about something that I've been meaning to talk about for a little while now. And I think I alluded to it a little bit last week when I talked about sentiment in crypto generally and how sentiment can change very quickly. But if we broaden that to not just crypto things, we broaden that to like just global things generally. I'm sure you've seen a lot of people recently, or maybe the last like 6 to 12 months, maybe the last 6 months especially, pivot to like AI, right? Or pivot to something else in the world that's not crypto. And these were people that were very active in the crypto space, whether they were like VCs or influencers or media personalities. And then because crypto is relatively quiet, they pivot to AI because these people are not actually into crypto. What they're into is the latest thing, right? And the reason they do that is because they produce content, especially on the influencers and media side of things. They produce content that get the most clicks, right? They want the most clicks for their content so they can sell you something. So generally, when I see these people and I see these pivots that they do, and it's pretty obvious who they are, honestly, before they even do the pivot. I mean, I can spot these people a mile away, but that's because I've been around for a while, and it's kind of obvious to me now. But generally, if you see people pivoting like that, don't listen to them about anything, honestly, because a lot of their content is going to be superficial in that they're obviously not passionate about it. They're obviously just making content for clicks and trying to monetize it in some way, and they're trying to sell you something. So generally, I wouldn't pay attention to those people. Or if you are paying attention to them, at least take what they say with a grain of salt and kind of like double check it or triple check it with other sources, especially people who have been in that particular industry for a while. So for example, if it's something like AI, I would much rather listen to someone who's been in AI for like the last 10 years than someone who just pivoted to AI over the last 6 months because it started being interesting and started being something that a lot of people were talking about, right? And that goes for literally any industry, but especially the ones that are kind of more so online and more talked about online, because there are plenty of obviously industries in the world, but the ones that are talked about online are generally ones that are tech-based, I feel. So like crypto and AI and other such things like that, right? And things that are particularly easy to monetize. And I think that's why crypto gets so many tourists coming, because with crypto, it's very easy to monetize. You can create a token, or you can sell a paid trading group or paid newsletter to give alpha, even though what you're saying probably has no alpha to it. I mean, the amount of crypto newsletters that I've seen from people over the years, they put out their kind of like thesis for, I don't know, the first half of such and such year, and they name all of these tokens. I remember reading one, I can't remember who it was by, but and I wouldn't name them anyway, but I remember reading one, I don't know if it was last year or the year before, and this person was just putting out this bullish case on like 30 different tokens, and I'm like, dude, what the fuck? Like 30 different tokens? Like, could you imagine trying to outperform like ETH as a benchmark asset by investing in 30 different tokens? How do you even do that as a portfolio construction perspective, right? Like let's just kind of like do a thought experiment here. To invest in 30 different tokens, and let's say you don't equally weight them, it would be very hard because you'd have to put like 10 or 20% into one token. Say one of those tokens is ETH. Say you put 20% into ETH. Okay, you've got 80% left. Where are you putting that? Well, you have 29 other tokens you have to choose from. How are you going to go down the list of those tokens and choose how to allocate to them? You're going to have some kind of framework for it. Okay, maybe you allocate based on market cap. Well, that's stupid because the market cap of assets can change very dramatically, even if those assets are considered quote unquote blue chip, right? We've seen that play out over time. So portfolio construction in crypto is so incredibly hard. And then you have these clowns over here putting out a newsletter with 30 different tokens that they're bullish on. But why? And they just come up with all these bullshit reasons. It's usually based on the narrative of the day. It's usually based on some short-termism stuff. And going back and looking at those newsletters now, they've all absolutely underperformed ETH, like by 90+% or more, probably from the top, right? And on top of that, they're never going to recover against ETH. They may recover against USD, but most of them won't, right? And so we're better off just holding ETH to begin with. And it's not just ETH as a benchmark asset. You can use BTC as well, because BTC obviously outperforms a lot of other tokens as well. But really, if you're buying tokens in the Ethereum ecosystem, you probably want to benchmark to ETH, right? So if you're not outperforming ETH and you were severely underperforming ETH by like 80-90% on these tokens, like then where was the alpha, right? There was no alpha. There was just you trying to sell people hopium because you were trying to monetize it in some way. Whether you had a bag of a particular token and you were trying to pump it up to exit, or you were selling newsletter subscriptions to people in order to get them in and to get the hopium going and for them to believe that you knew what you were talking about. Or maybe you're running like a staking service, one of these L1s, where you can actually run a staking pool for a lot of the DPoS L1s, and then you're getting people to stake with you, and then you're earning money off that. Or you have a paid Telegram group where you're charging people a fixed amount of money per month, or a subscription fee per month, to give them alpha, whatever that fucking means, right? So yeah, I mean, I get quite frustrated about this. As you guys know, the Daily Gwei is completely free, and I don't think I'd be doing the Daily Gwei if I had to monetize it. Like if I had to monetize it from a if I don't make money from this, I'm not going to be able to live perspective, I probably wouldn't do it because I'd feel gross doing it, because you would never be able to trust that I don't have an ulterior motive, right? That I'm not trying to kind of get you to buy something or trying to show you something. And the only token that I really ever talk about favorably on here is ETH, because I don't want to talk about other tokens favorably and basically insinuate that you guys should buy it or anything like that, because I'm not trying to give you investment advice. It's up to you guys to make up your own decision on these sorts of things. And I truly do believe that ETH will outperform everything, pretty much everything, over the long run. And I'm talking, 10 years. If I had to pick a token to hold for the next 10 years, or anything to hold for the next 10 years, I would be in ETH. Like pretty much 100% in ETH for the next 10 years, because that's the only thing that I can see maintaining its value, not only against USD, but obviously against itself. Because everything else that I would look at and want to buy, I just can't see a reason why they would hold their value against ETH over the next 10 years. And obviously, in between those 10 years, you could have 1 to 2 year periods where things hold their value, but it's too hard to pick things like that. It's too hard to pick the long-term things. It's too much overhead. I would much rather just hold ETH. Now, that's me personally. Obviously, anyone can do what they want. And obviously, if you are starting from a position of, a very low bankroll, maybe you've only got a few grand to play with, and you want to grow that into a lot more money, then you're probably going to want to play the more degen stuff, right? You're probably going to want to go down the risk curve. And I've talked about this before, and I've talked about how that's totally fine, but you always got to be aware of what you're getting yourself into, of course. And you always have to be aware of the people that you're listening to as well, and realize that almost all of them are just trying to shill you their bags. They don't care about you. They don't care about telling you when to sell. You'll notice a lot of them tell you when to buy, but don't tell you when to sell, because honestly, they don't want you to sell. They want you to stay in there. They want to get out before you do. And then after that, they don't really care what you do with that. But anyway, on that note, that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.